Have you ever seen the stock market behave like a seesaw, where tech stocks plunge on one side while gold shoots up on the other? That's exactly what happened today. Dow Jones, one of the most watched stock indexes in the whole world, slid as Nvidia and other tech giants stumbled. Meanwhile, gold climbed towards a record-breaking price, showing us once again that investors rush towards safety when the market gets shaky. On 2nd September 2025, the Dow Jones fell somewhere around 0.6%, wiping away hundreds of points in a single day. The S&P 500 and Nasdaq also sank, with the Nasdaq dropping nearly 1% as technology shares took the biggest hit. It marked the lowest point in more than a week for all major 3 US indexes. The real headline came from Nvidia. Once the dawn of the AI boom, the company's stock plunged more than 3%, leading to a broader sell-off in technology. Other big names like Apple, Microsoft, Alphabet, or Amazon also slipped, showing that the investor confidence in tech sector is facing some serious challenges. Nvidia isn't just another tech company, it's at the center of artificial intelligence and advanced chip making. For months, its success helped push stock market higher, giving Wall Street another reason to stay optimistic. But today, Nvidia's sharp decline shook the confidence, and investors are beginning to question whether the AI hype can continue to drive growth or not. The sell-off wasn't only about tech. Rising bond yields added even more pressure. US Treasury yields climbed higher, making stocks look less attractive compared to safer government bonds. When bond yields rise, borrowing costs increase, and that usually hurts high-growth companies like those in tech. At the same time, politics entered the stage. A federal appeals court ruled that most of former President Trump's tariffs were illegal. That decision created fresh uncertainty about trade policy and raised new questions for businesses that rely on imports and exports. Markets dislike uncertainty, and today was a perfect example of how legal and political news can shake investor confidence. While stocks struggled, gold had its moment to shine, literally. Prices jumped more than 1%, trading as high as $3,578 an ounce. Well, that's definitely a new record. And we know by now that when markets turn turbulent, investors often flock to gold because they see it as a safe haven. And today's surge definitely shows that exact pattern. This shift matters because it shows us where investors' trust is moving. When big tech companies like Nvidia fall, it's not just about one stock price. It signals doubt about the future of an entire sector. For months, tech and artificial intelligence have been driving Wall Street higher. Many people believed that AI would keep delivering profits no matter what. But today's sell-off proved that even the strongest stories in the market can face setbacks. Another reason this shift is important is the message from gold. Gold hitting a record high tells us that investors are nervous. They don't want to risk their money on companies that could lose value quickly. Instead, they're looking for safety. Gold doesn't pay dividends and it doesn't grow like a company can, but it has something special. It's steady. People have trusted gold for thousands of years. When fear rises, gold shines brighter. It also shows a balance of risk and safety in the economy. Think of it like a seesaw. On one side is risk, stocks like Nvidia, Apple, and Microsoft, and on the other side is safety, gold and government bonds. When one side goes down, the other side often goes up. Today, the seesaw tilted towards safety. This shift matters for regular people too. If markets keep pulling money out of tech and into gold, it could slow down investment in new technologies, which might affect jobs and innovation. At the same time, rising gold prices could make things like jewelry or electronics more expensive. And higher bond yields could mean bigger interest payments on loans, mortgages, or credit cards. In simple words, today's market moves are not just numbers on a screen. They are a signal of what investors fear, what they trust, and where the economy might head next. The big question is whether this slide is temporary or the start of something bigger. Tech stocks have been leading the market for months, but a pullback was always likely. But if bond yields keep climbing and political uncertainty rises, this downturn could last longer than just a few days. Investors will also be watching the Federal Reserve closely because many people are thinking whether the Federal Reserve will stay truly independent or not. Any sign that interest rate policy is influenced by politics rather than economics could rattle the markets even more. But for now, the focus is entirely on balance. With that being said, this brings us to the end of this video. I hope you found it helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for more financial insights. Until next time, take care.